Welcome back. I'm your host, Darnell Jackson. In this crypto report, we're going to be talking about regulation with crypto exchanges. But before we do, make sure you subscribe to your favorite channel on YouTube, Darnell Jackson Crypto. Shout out to all the subscribers. Okay, let's jump over to the agenda. We're talking about fear of crypto regulation, why Uniswap, FTX, and Binance are limiting traders. Okay, we're going to be talking about a tweet. We're going to go through the headlines. I will show you some video. Then we're going to look at the market, have a little bit of opinion. All right, this is what's happening right now. Let's jump over to the tweet that is discussing this topic from Pomp on Twitter. He's talking about FTX has decided to remove all leverage from over 20x from their platform. The assumption would be most other platforms will follow suit. And he retweets a tweet from the CEO of FTX. And he's talking about an effective margin system is integral to an efficient economic system. There are limits to everything, though. And so he's going on, he's saying, we worked hard on our margin system at FTX, allowing users to cross margin most assets on the platform. It means needing to manage one wallet instead of hundreds. It also means massively fewer liquidations. And he's talking more about this, and he's letting you understand. That being said, there has been a bunch of discussion recently around high leverage greater than 20x. Nearly every crypto derivatives exchange allows it, and nearly every one will say the same thing. It's a tiny fraction of volume and positions. For us, like liquidations, it's way less than 1% of our volume and positions. It's not a significant part of the exchange. It's also not what chiefly contributes to volatility. Liquidations do. Some exchanges, although generally not so much FTX. But over 20x is small. The average leverage used to trade on FTX is about 2x. And while we think that many of the arguments are high leverage miss the mark, we also don't think it's an important part of the crypto ecosystem, and in some cases it's not a healthy part of it. Okay, so he's talking about getting rid of high leverage trading, which is really going to limit traders. Let's take a look at the headlines talking about this and how this is impacting the exchanges, whether they are centralized or decentralized. Let's take a look at the first story here from Decrypt. And this is talking about the decentralized exchange. So we're not even talking about the centralized FTX from your man Sam. This story from Decrypt is talking about how Ethereum decentralized exchange Uniswap drops tokenized stocks as regulators close in. This report from Robert Stevens is about how Uniswap's claim to decentralization has shriveled under regulatory pressure. The article says it turns out that Uniswap, the decentralized exchange, isn't as decentralized as it made itself out to be. In anticipation of regulatory scrutiny, Uniswap has delisted several tokens that could constitute securities, including Tether Gold and tokenized stocks from crypto derivative platforms like Synthetix, while it monitors the evolving regulatory landscape. The full list of about 100 tokens is here. Let's take a look at that. And this is on GitHub, so you can get an idea of which tokens are targeted here. This is the core, this is the actual raw data. All right. So this is the tweet here from Uniswap, and they have talked about how they're restricting access to a small number of tokens at app.uniswap.org. These changes pertain to the interface. The protocol remains entirely autonomous, immutable, and permissionless. Okay, so responses to that tweet. What's the point of the governance token? Major disappointment. You are not decentralized anymore. If you can block this, you can block anything. And I'm sure this is to appease the SEC. But then don't lie and just say it is still decentralized. Makes me not want to believe you. Big Dog says, and that's the end of Uniswap. LOL. I see a lot of Synthetix tokens. Are these authentic, or is Uniswap purging fraud? So there is definitely some negative reaction here. Very bad move from Uniswap. You do not see crypto should be as lawless and unregulated as possible, like a free man wandering around with silver eagles in his pocket. So people in the crypto world are not responding to this move by Uniswap. They're not very happy with this. This is in response to the regulation that's happening. Let's take a look at some other articles here. Another report is talking about another huge exchange. This time it's the Block Crypto reporting on Binance. This article by Wolf Zhao is talking about how Binance is going to lower futures trading leverage limit to 20 times for existing users. So this matches what you see FTX doing. Talking about crypto exchange, Binance is poised to lower down the futures trading leverage limit for existing users. Binance co-founder and CEO Changpeng Zhao said in a tweet on Sunday that Binance Futures has already started limiting new users to maximum 20x leverage since July 19th. Let's take a look at that tweet. So this from the CEO of Binance, who has been under the major crackdown hammer recently. He says that they have limited their traders to 20x leverage. And you can see the response to this tweet. One person is saying, "Thank you. This is a right thing to do, because in my humble opinion, too many retail traders have no idea how to leverage work, and they often get wrecked without understanding why. Binance might take a small hit in the short run, but this is a win for everyone in the long run." So this looks like they have a little bit of more positive reaction. Binance's main objective is to keep the community safe. So let's see, this is what we're looking for, our chance for a healthy market. Thanks, CZ. Love you. Good move always. So, smart play, we'll be seeing max 2x leverage in the future. Binance leads, not follow. Good decision. Deal with it. So, this news from Binance is being received positively. Let's take a look at other headlines that continue with this theme. We've already discussed FTX. We discussed the tweets from Sam Bankman-Fried, and in this article they're talking about it again. This article here on CoinDesk from Kevin Reynolds is talking about in a move to perhaps help dodge the worst of a coming regulatory storm. The head of a large cryptocurrency derivatives exchange said Sunday he's limiting the amount of margin trading dep traders can wager from 100 times to 20 times. So this is going to hit the advanced traders. And these guys are doing this in hopes that they can get ahead of what regulators may do to them. This is another report from Market Insider talking about how both of these guys are limiting their traders. Now, what I want to do is I want to get over to the interview. I'm going to play some video right now of the man Sam, and he's going to be talking a little bit more about what they're doing. One of the things that I want to document is where FTX, which obviously this is made huge news with their recent funding, where they raised over $900 million in funding at FTX. But what many do not know is that FTX, their biggest investor, was Binance, and they had to actually buy themselves out of Binance. So I want to take a look at this important interview on Decrypt Media. Take a look at this. Subscribe to Decrypt Media. I'm going to jump over to the placeholder comment that I left here. Okay, make sure you check out this video. Thumb up the comment. Let's take a look at what Sam has to say, where he talks about how he bought out Binance. There's also a place mark where he's talking about Uniswap, so you can see that link. Uniswap is another decentralized exchange. They are actually making some moves due to running out of financing, less so than it is due to regulation. So let's take a look at what Sam's talking about when he is speaking about how FTX bought Binance out of their company. Let's take a look.
So recently, I repurchased shares from Binance to buy them out of our cap table. And so that is coming out as well.
Okay, so that's embargoed until you tell me, yeah. The Binance.
Yeah, but it'll definitely come out by Friday at the latest.
Friday. Okay, that's cool, because I was going to ask about Binance.
Yeah.
I mean, because I know they're an investor in FTX, or were, or yeah.
Yep.
So that's basically what you're doing. You're kind of, what's the word for it? Edging them out by rebuying the shares. Yeah.
Yeah, I think we're sort of doubling down on FTX, and I think I'm excited to do that, and I think it also just makes sense given given the roles that our businesses are playing in the space, and and I think it also gives us more flexibility going forward.
So, I mean, how have you viewed what's been happening with Binance throughout the world in recent months or weeks?
Yeah, it's been quite the barrage. I mean, I think that this is, obviously I don't know for sure. I'm not involved in, the conversations between them and regulators. And so all I can do is speculate. And yeah, but you know, I guess something I'll say is that we try really hard to be as cooperative as we can with regulators. You know, we try to be proactive about doing what we think is not just compliant, but also within the intentions of where regulators want to go. But we also try and be super responsive. If regulators ever reach out to us, we want to be immediately responsive to what they want, and we're nimble, we're able to make updates quickly. Whether it's applying for a license, which we are trying to do everything everywhere we can, or whether it's restricting assets, or products on our platform, for certain users. Those are both things that we're actively doing, and again, super happy to take feedback on. I think that, like, when you don't do that, and when you sort of appear less flexible or responsive, I think that's sort of like more likely to lead to cases where regulators might feel like they have no choice but to start bringing the hammer. But again, obviously, like, so can only directly speak to the experience we've had.
Are you? I mean, you personally obviously know CZ, and so
Yep.
how has he taken the news that you're, you don't want them as investors anymore?
We had a cordial conversation about it. Talked about terms and got it done pretty efficiently. I think it's something that we both had been expecting it would go in that direction for a little while, and now seems like a decent time to just go ahead and get it done. And so, yeah, I mean, I think that, like, obviously they did quite well on the investment as well, and so I think it's been, I certainly think it's been a win for them. And but no, I think we're all both on the same page about that.
So it's you're parting on amicable terms, and how do
Yeah.
you?
All right, so you can see they're parting on amicable terms. He had to buy him out. If you noticed, he explained what differences he noticed in how, when she asked him, he explained how they were focused more so on regulators than what Binance was doing. So it seems like he made an intentional effort to separate himself from Binance. So that means he thinks they're a little bit more suspect, if you will. All right, so check out the other video. I want to thank you, everybody, for liking the video. If you didn't like a video, make sure you check out all the other videos. New crypto videos every day. Keep watching videos until you find one you like. If you watch every single video and you can't find one you like, then share these videos with somebody who will. Until the next time, thank you for checking out this video. Peace.